Alright, hello guys, glad to have you on board again today, Wednesday, you know the story, let's jump in. I feel like I'm recording videos all day long at the moment, but that's the way it is. Okay, so anyway, what we were talking about a few weeks before is still currently playing its game. Remember that we've noticed on the higher time frame, the flow trading is H1 time frame, and I'm looking at it one time frame above so that I can have a vision of the broader picture. But what we pay attention to is the behavior of prices inside of the trend channels in here, all right? And the thing is that as we were looking at the broader context, we've notified multiple times weeks ago that there was those volatility alerts that could severely impact our trading environments and make it kind of blurred lines and fake signals and try to put some uncertainty added on top of the usual uncertainty that flow trading will navigate upon. So on that front, we've said these things generally tend to last for 5 to 7 context boxes, which means we're already 6 boxes in, so we could be at the end of the inner effects of those volatility alerts. We've said and mentioned that this would likely terminate till May, and that hopefully we'll get more clarity in the market structure till then. Our hesitation came around the fact that maybe we would already have the 2 corrective flows in a pretty unconventional manner, or we did not, and in that sense we might have a second bearish flow to suffer before actually figuring out the beginning of a new flow series. Though this assumption seems to have resolved itself because, well, until then all that we've seen is just nothing but bullishness, and that was one of our 2 assumptions back then. And remember what we stated at that time around, we were basically having the narrative of saying, I don't know more than that. I wish I could give any rational answer, but the reality is that I can't provide an answer to this. So I will just embrace uncertainty and say, well, there's one thing I know for sure is that it is not 50-50 odds. There are slightly better chances for the market to perform to the upside rather than to the downside. Not because I have a stupid belief, but just because the market generally tends to follow the low-risk strategy odds, which meant to me that not knowing anything, I'd rather like to be comfortably seated as a bull rather than a bear because of these slight changes in the odds. That didn't nearly mean back then that I was able to predict that the market would perform more to the upside than to the downside on that specific occasion. It just means that out of 100 trades, in such uncertain times, you'd rather like to be in the side of the low-risk strategies because they will have more than 50 chances of succeeding. That's really the way it was. So I've seen a bit of confusion regarding this, and I really wanted to make it straightforward, okay? I didn't really knew anything. All I knew is that I'd rather like to be on that side of the trade rather than the other one. All right, so the market gave me the answer now, and it has been going as expected, which wasn't guaranteed at all once again. Though this trend channel in here, which is our H1 context, has been performing upward quite significantly, down to the point that now we'll actually be reaching out potential volatility alerts, which means the price now significantly lacks of volatility. And as these trend lines tend to converge, we're building some kind of wedge structure, which means the volatility is now compressed. And, well, we're at the stage in which, of course, remember that when you do trade in flows, there are 2 things you need to really pay attention to on your psychological behavior. Is, you know, 2 things. The market will play around the natural stupid biases of human beings, which is it's going to play around time. It's just going to fasten things at some point and then slow it down again. And it's going to basically create artificial volatility to trigger some more FOMO trades or go chasing some stupid stop losses and stuff like that. But the broker will do it like that, by impulses, either because there are external catalysts, like, I don't know, economy calendar stuff or whatever, but we've seen that this week is pretty empty on that front. So sometimes the market maker doesn't even need to have a narrative to follow through. It's just going to move prices because, well, that's what market makers do. So in that perspective, you know that you just can't base any of your decision due to the fact that prices are moving too fast or too slow, okay? The price momentum is nothing you care about in flow trading, all right? Markets can be overbought and neither should you care, all right? It's really the way it is. You don't pay attention to market timings in these things. The second thing is that, well, the market makers, like we stated, would generally tend to like maximizing uncertainty, which means there's too much sense of, yeah, this can happen too much, well, at some point the market maker generally just fucks up that narrative and going the opposite direction. So these are the two things you know, all right? You can't have certain answers. If you have such a certainty level at some point, that probably means you're getting fooled and fucked. So that certainly doesn't mean you need to change anything about the strategy, but remember that generally we tend to have these fulfilling prophecies when we do trade above the higher timeframes context. So to me, that's the reason why I got cautiously taking some partial profits out there back then. And well, as you can see, we might be on the verge to do it as well on pretty similar price tags. So I won't do it twice. It's just I've already done my risk management. And remember back then, I said I would profit take to be able to buy more when we'll retrace down to either the moving average or the Bollinger Bands. And if I go down to the H1 time frame to show you these two, well, basically that would be it. Okay, the Bollinger Band, I'll give it a second to plot. All right, the moving average is in here. So now we've got two choices. Either we break out this trend channel in here, and I'm going to require a third range boundary before eventually considering to buy at the moving average level. And all I know is that if it doesn't work out there, or if I don't find sufficient risk limitation to get in, well, anyhow and anyway, I'll always buy the lower Bollinger Band. All right, so that's the way it is. I'm going to either buy there and there, or just there, not there, or eventually not there and just all in there. All I know is that the taking profits that I've made in this area will be reinjected in the market anyway, probably with an additional risk taking. Okay, all in all, net means all of the positions that I have in the market may never have a global expected loss of more than 2% if I get stopped out of these trades. And remember, this can happen. The market maker can do whatever it wants. That doesn't mean we've triggered something that looks pretty bullish, that we're not going to get the big, nice rejections we've talked about. This could be the second corrective flow, and we could do a 180-degree reversal in here just to go right back down to the previous low, break it, and then going up. This is one of many ways the markets can go fulfilling the flow prophecy. So remember, if you're too certain of the future, that means you can be someone else's dumb. So don't try to play the narrative of this can only happen and not that. Well, so many things can happen with flow trading. Just be smart enough to understand that you just can't risk it all on a single trade. There's too much uncertainty and volatility manipulations in these contexts. So just assess that net over 100 trades, you should be profitable by following these simple sets of rules. So anytime you're making things overcomplicated in a flow trade, yeah, it generally means, well, you're probably not really making real assessments. You're just wishful thinking. All right? So I'm really assessing the fact that in terms of risk management, I know that I'm going to have to buy if there are follow through, and if we break out of this trend channel, buying the moving average in the Bollinger Band will be two things that I know I will do. All right? Then the only thing that depends is just how much of these trades, how much risk I'm going to take on these trades. This will mostly depend on the technical signals that I'll get at that time. Hopefully we'll be able to talk to each other again next week with more precise context. Well, until then, all I'm just saying in here is that I know what my next move is if we go down, and if we go up, well, there's nothing I can do. It's just going to be the confirmation that we broke the previous high points, and that we're definitely starting a new three-flow sequence. That would just be the first one of the threes, which means even if this one breaks the previous high point, all I know is that I'm not going to do anything until I get a drawdown that pushes me back to the moving average or the Bollinger Band, which I will buy anyway for the second flow, and then Bollinger Band, third flow. You know the drill. I'm just going to follow the goddamn guidelines. All right? So that's the way it is. Not letting yourself falling down to the uncertainty narratives and volatility manipulations. Just say, okay, that is what I know, and I can fulfill the structure, though as long as I can answer the structure and remove some of the uncertainty, well, I'm going to go trade along with that. And if I end up with a stop loss this time around, well, it doesn't prevent me from doing it the next time around. It's really the way it is, all right? But for now, like we stated, we're still under the influence, even though we're reaching the end of those volatility alerts. So if for whatever reason something was just like, yeah, everybody thinks we're going up now, let's just go down, all right? That could still be possible to me. We're trading at the previous market top, and we said that there's still so much uncertainty whether or not we've had two consecutive corrective flows in here, or if this was just one all along and the next one has to come along. Though I really still have that uncertainty, which means I need to evolve with both probabilities running in parallel until one of these is invalidated. Because for now, none of them is invalidated. we did have a nice upward flow, and I've been trading it. I've risk managed my taking profits in here, and now I'm just letting myself waiting until the market gives me the final answer. We're pretty much nearing the end of the volatility alert, so it's still uncertain times and uncertain context, and I wouldn't be surprised if for whatever reason an external catalyst were to fuck it all around and bring some massive volatility to the other side. But until then, this is nothing more but assumptions, all right? So I know what my strategy tells me to do, aka no thing. But there's only one thing that I know as well, is that if it goes down, I probably will try to buy anyway. It could end up with stop losses, I don't give a fuck. All I know is that basically I have a first flow and I'm going to buy if the market goes lower. All right? And if the market makers want to flush us all the way down to the previous bottom, I'm going to be taking down some stop loss in the process. But net, all the gains that I've made trading the previous flow, trading this flow, partial profit taking and the like, I will still be made more than whole. I have significant profits already. And if the market makers takes a couple stop losses out of me, well, you know what? I'm just going to say, okay, take it, bro. I'm going to be there the next time around anyway. And that's how you should think as well. All right? Don't try to just flow away from potential losses. Just embrace them. Sometimes they will happen. And it's just, well, the natural order of things. All right. So that's for the S&P 500. Pay attention to your psychology and mismanagement. We still are under influence of two consecutive scenarios that could run in parallel. Two parallel scenarios that both have chances to actually exist. So as long as one hasn't been ruled out, and could be the case if we significantly accelerate over these levels, but if we reject, well, that means we still are in this parallel stuff. And remember that, yeah, the market maker tend to like to fulfill uncertainty prophecies. So I don't know, but all I would say is that out of these areas, I'm still very cautious. But if the market goes on drawdown scenarios, I'll probably, once I get the third range boundary, buying the moving average and or the Bollinger Bands. All right? Until then, I hope we'll be able to talk to each other again before that happens. But be ready for this to show up pretty quickly. You know, the market can accelerate or slow down as it will. Other longer-term flows that I haven't been mentioning in the weekly updates and that I wish I have to. Some other psychological mismanagements in here, mostly on the French community, but I bet you must have the same feelings anyway, because that's what flow trading does. It tends to trigger emotions. So the thing is that basically in here we have the structure. I'm going one time frame above in here as well, so that we see the flow trading inside the trend channels, okay? And the story is, well, basically we had nice, very pumping flow in here back then. Markets have been drawing down, back down to the Bollinger Bands in here, and it's been hard, rough bottom formation. But now we could be in the process of forming the second flow. So the second flow means first we need to reverse the context, which is what we've done. Now we've got a rising context and prices rising as well. We have a rising moving average supporting on the high time frames. Same thing goes for the lower ones. So it's still like looking positive all across the board. So we're in the second flow, and what I see here is people complaining because, well, the latest price action of the silver has been, well, like rocket ship to the moon. So it's been like $5 in just a few weeks lifespan. So it was like, yeah, it's really going too fast too soon. Maybe we should start looking on some gains and expect some retracement. So like I said, I don't like that. Whenever you say such things, I would like you to remember, like hear me in your brain and say, yeah, I remember Phil telling me that so many times. I mean, when you are flow trading, okay, it's different from low risk trading, and these two are intertwined. Remember that you can't flow trade if you haven't performed the low risk strategy analysis first, because your flow trading time frame is going to be defined by that. But once you've assessed the time frame in which you're going to flow trade, remember that you need to put yourself into a different context box. All right, so trading flows doesn't require the same sets of skills than low risk strategy trading. All right, the difference is when you are in low risk strategies, there are multiple contexts you need to master. You need to remember quite a significant set of rules and not to mix things together, so that you do have the nice risk limitation. But well, normally low risk trading isn't that impactful in terms of psychology. Flow trading instead is just going on lower time frames where chaos and uncertainty and time frames or time series are actively manipulated to create emotions even more than in the low risk strategies. So in these flow trades, you need to pay real more attention to those feelings and to those emotions, fear of uncertainty and lack of patience, or trying to control time. Don't ever do this. The thing that I'm trying to tell you here is that, well, you will have to learn these lessons the hard way by probably making those mistakes first and then learning out of them. So the way is, don't blame yourself for falling for those narratives like, yeah, the market has gone too high, too quick, I'm going to start locking some gains. Yeah, it's a bad choice. You know, in flow trading, anytime you trigger an action based on it's gone too fast or too whatever, yeah, no way, all right? Or you say, yeah, I have, for example, two scenarios running in parallel. I can't flush one away, so yeah, I'm just going to take the profits because I don't know. Well, don't ever do this. Always remember, as long as you trade in the side of the lower strategy, you rather like to be safer than the opposite way around, and it's not 50-50 odds. If uncertainty is there, embrace it instead of trying to get away from it. Don't try to fly away from uncertainty. The market makers will maximize that, so they will do anything to maintain uncertainty, and if you fall for the doubt and say, yeah, it's too much stressful, I'd like to just get out, so I take the profits now rather than risk of losing it or whatever. Bad decision. Bad decision. Second one is, yeah, it's rising too quickly, I'm taking profits. Or it's falling and it's dropping too quickly, so it's going to take my stop losses. No, it won't. Remember that the only thing you should pay attention to is, does it reverse the trend channel? If it does, then take the profits on the third range boundary, and that's all you know. All right? On the uncertainty behavior, you know that there is a flow sequence that you should know, absolutely master, and whenever you identify the structure, well, don't try to trade away from it. All you know is that once the first flow is terminated, you get a third range boundary, then you buy the moving average and or the Bollinger Band. If you get to take in a stop loss in the meantime, well, still means try it again next time around, okay? Sometimes it will work, sometimes it won't, but net on the overall, it's a very profitable strategy. Okay, now you're in the second flow perspective. So you're in the side of the lower strategy. You don't trade the contrarian flows. You only look to the upside. So now you're in the second flow. What is the next thing that you know of? The next thing is that the second flow is confirmed when you break out the previous high point. All right? So currently, you shouldn't even paying attention to silver. Sure thing, it's going high quickly, and you might have made some nice gains, and you fear of eventually losing them all, or you think you can arbitrage price by buying lower or whatever. These are at least professional strategies which you shouldn't even try to do. You should just do what you're supposed to do, knowing that all of these are probably irrational sentiments and behaviors, that this should nearly trigger an action. Right? You can't act upon those feelings, and you know that. So please don't fall for the emotions. What you know for sure is that this flow is supposed to break the previous high point, and only then you could eventually start to say, well, we're really trading above the higher time frame context and stuff like that. It feels overheated. It feels like people will only go up or whatever. At that point, yeah, if you're trading and closing prices above the higher time frame context, yeah, these are rational behaviors in which you can say, yeah, maybe partial profit taking could make sense, but never take it all out. Remember, the only way in which you take it all out in a flow trading is when you got that fucking trend channel reversed, okay? And that means at that point you will lock on the gains on the forthcoming third range boundary, and that's all you should know, all right? That's really the only way around that thing, okay? These are the rules I taught you. I never told you, yeah, you can shift the rules and bend the rules, and no, really. There is a core element of flow trading, which is learn this flow sequence and know it by heart. And once you know that one absolutely perfectly, pay attention to your feelings, all right? Anytime you flow trade, you must always remember that if whatever things you're about to do is related to the fact that you think prices are moving too quickly or too slowly, according to your self-fulfilled plan, all right? That's generally things that will happen. And once again, I've been there before, and I've done that mistake several times in a row before, learning my way out of it. I'm just kind of trying to tell you that there's no other way around but you fighting against those biases until the day they don't even matter anymore because, well, they don't even pop up because you've been so used to flush them away when they try to attempt triggering emotional actions. Well, this is one thing. Remember, anytime you think you should do this because it's going too fast, and if you're in a flow trading strategy, just fuck it. I mean, don't even overthink that. Just throw it to the garbage. Second stuff is, well, like I said, if you feel like this can only happen and that or that, generally means if you're trading above the higher time frame context, might be an appropriate time to start logging some gains. But for now, the flow trading hasn't even started. It starts when we break the previous high point. So for now, yes, we're trading above the resistant context, and that could be a sign that, yeah, for whatever reason, the market may slow down in here. But that certainly doesn't mean it will stop or reverse. Just giving you quick examples. Back then, the first flow was just triggering, and as you can see, well, yeah, we've been trading above the resistant context, and good luck if you're taking your profits back then, because you've missed on a $10 shot in just a few weeks afterwards. And that could be just the same. Remember, the market makers and prices can do whatever the fuck they want. So don't ever try to anticipate their job. All right? Lessons learned from my side for years now. I hope you guys will come along with that as well. The faster, the sooner, the better. All right? That's really the way it is. There's no other way around. You're going to learn your way out of this. So try to be smart enough to not waste too much time in the process. And without further ado, guys, that's more than enough for today. See you guys next week.